I would now like to invite all the panelists with us for the next session on stage. Mr. Jayanta Das, ex-CGM SBI, Mr. Mohammad Abdul Manan, MD Islami Bank, Bangladesh, Mr. Anil Kumar Khera, GM and Head Delivery Large Programs, Wipro Infotech, Mr. Shashank M. Joshi, MD Money on Mobile, Mr. Rajiv Kumar Gupta, Executive Director, SBI Life Insurance Private Limited, Mr. Anand Bajaj, President and CIO, Yes Bank, and Ms. V.B. Bhagwati, GM Andhra Bank. Challenges of reaching out and harnessing the unbanked. In the developing world, more than half of all adults do not have a bank account. Of those that have an account, less than 10% make at least 3 withdrawals a month. For the unbanked, it can be a challenge to increase savings, improve credit, and accumulate assets when managing money outside of the traditional financial sector. For financial institutions, it is a struggle to understand this untapped market of consumers and aid them in money management. We will be deliberating on this topic now. As Mr. Jayanta Sinha, ex-CGM, had to leave for some important tasks, Mr. S.G. Anil Kumar, Chief Executive Officer, IFMR Trust, would be moderating the session. I would ask him to please take over the session.
Thank you. It's a bit of a last-minute thing for me, so I'm just gathering my thoughts. Good again, because there has been some voluntary exclusion, as ma'am mentioned in her keynote address, so a lot of... No, the incentive outside is more. Bio break and some tea and coffee. Great, it's a real privilege to be continuing here and extending the topic for me, because the panel is rich in experience and very, very diverse. So since we have a fairly large panel and we still have the same time to catch up, we'll start with Mr. Abdul Manan, MD of Islamic Bank, Bangladesh, with his talk. And then we actually have three PowerPoint presentations to be made by 3 of the panelists here. So we go through the presentations and then get into the panel discussion and the question answer session. So, sir, over to you.
Honorable moderator, distinguished panelists, guests, participants, business leaders, Assalamu alaikum and very good morning to you all. Let me start with my personal excuses and apology. I am just coming directly from hospital. Since I had to reschedule my travel plan due to some unavoidable reasons, I missed few important sessions. However, though late, I feel happy to join and meet you at this very important conference. It is indeed a great honor for me to stand here today in front of this august gathering to speak on this much talked about subject in the financial world, that is financial inclusion. We know financial inclusion or inclusive financing is the delivery of financial services at affordable costs to sections of disadvantaged and low-income segments of the society. With the addition of technology in the form of mobile phones and other IT-based systems, the potentials of financial inclusion has grown manifolds, which we are here to explore. Since I come from an Islamic bank, I would take this opportunity to share with you some points relating to Islamic finance, its objectives, features, priorities, and strategies. I must say that financial inclusion is more pertinent for Islamic bankers because we consider it as one of our prime obligations. Distinguished presence, Islamic finance is based on Sharia, and the objective of which is to ensure universal welfare. In that premise, the objective of Islamic finance include freeing humanity from all kinds of shackles, burdens, and deprivation, ensuring basic needs of human being, and maximizing welfare through all its activities. It ensures distributive justice and is based on need rather than greed. Islamic finance encourages prioritization of needs. It pursues a three-step need prioritization model. These are Joruriya, that is essential needs. Second is Haziya, that is complementary needs. Then comes Tahsaniya, that is beautification or decorative needs. Islamic finance is not only has a close relationship with financial inclusion, rather financial inclusion is built in to Islamic finance mechanism. While the idea of financial inclusion got popularity in recent times, Islamic finance carries the spirit of financial inclusion from its inception. Ladies and gentlemen, in Bangladesh, different approaches and actions have been taken at different stages for widening financial inclusion. At the post-liberation time, the approach was to expand the rural branches of nationalized banks and to promote cooperative societies offering financial and other services. In late 90s, the approach was to reach out to the rural poor through Grameen Bank and other microfinance institutions with credit plus approach and preference for women in microlending. Respected presence, our central bank has recently taken many steps that include refinancing banks, extending SME loans, agricultural refinancing schemes for on and off-farm rural economic activities. Recent interventions also include refinance schemes for environmental friendly sectors. Bangladesh Bank pursues financial institutions to take up CSR activities as means of financial inclusion. As for the status of financial inclusion, Bangladesh stands second among South Asian nations with 66% household access to services from banks or microfinance institutions and cooperatives, while Sri Lanka ranks first with 80% plus of inclusion. Ladies and gentlemen, in Bangladesh, mobile financial services took off in 2010 and central bank issued guidelines in September 2011. The purposes of the guidelines are to provide a regulatory framework for mobile financial services, to minimize use of cash and associated costs, and promote access to formal financial services for the poor and unbanked population. Bangladesh follows bank-led mobile financial service model, where only 24% of adult population have bank accounts as against 60% mobile phones, using mobile phones. As regards the coverage of Bangladesh, we see 18 banks are providing mobile financial services among 28 banks who are approved for the service. Key players are Bikash of Bragg Bank, DBBL Mobile Money, and Mcash of Islamic Bank Bangladesh Limited. There are over 113,000 agents countrywide. As of August 2013, there are 7.46 million account holders. Mobile financial services accounts have been growing at a rate of 10% per month. I repeat, 10% per month. The unique feature of mobile financial services fund flow in our country is that cash in markets are urban industrial and commercial hubs, while cash out markets are remote rural areas. This shows a positive and inclusive fund flow trend from urban to rural markets. Mobile financial services are impacting our rural economy, improving household welfare, expediting small enterprise activity, encouraging rural savings, and above all, increasing financial inclusion. Ladies and gentlemen, we all know that South Asia is the most densely populated region of the world and enjoys demographic dividend of 17% of the world population. Some countries are expected to be emerged as economic superpower by 2050. The area has a golden history of rich cultural heritage, vast wealth, and huge prosperity for about 7 centuries that attracted Western businessmen and treasure hunters. People of the area have a long record of struggle, resilience, and emotion. We have never been poor due to resource constraint. Rather, we were made poor by some external forces. This is high time we come out of all burdens and shackles. It is time we give our financial system a human face to work for the downtrodden people. Mobile financial services may be an important tool for revitalizing our golden past once again through effective utilization of our hidden potential. I do hope this region will be the gravity center of world economic prosperity. Finally, I thank the organizers for arranging this conference and allowing me to say a few words before such an enlightened gathering. I carry home high hopes for better days ahead of us in terms of financial inclusion and economic well-being. Thank you very much, ladies and gentlemen. Thank you once again.
Thank you, Mr. Mannan. It's quite encouraging to know a lot of initiatives that are happening in your country within the framework of the law. Do you have a PPT? Yes. Okay, so may I request Mr. Prakash Kumar, General Manager of SIDBI, to make his presentation and share his thoughts. And then, right.
And to address you all. This is the Financial Inclusion Conference, and SIDBI being the apex financial institution in the country for promotion, finance and development of small and medium enterprises. I'll be focusing my discussion on the credit side of financial inclusion. Because as you have been discussing this perhaps since yesterday, and I've not been able to join you yesterday. When you talk about financial inclusion, you talk about certain basic services, and which includes a savings, a remittance facility, insurance, micro pension, and a credit. And perhaps a credit is the most difficult part in this entire scheme of things, because the rest all is a service. I mean, you're giving a service and charging a fee for that, but the credit is basically about taking a risk of lending and recovering the money. But how this whole thing has happened is that wherever financial inclusion has been driven through whatever channels, the first thing that we talk about in the country is credit, be it the microfinance model or the SHG bank linkage model, which started some 20 years back. Why? Because we are able to see viability in this. We have been talking about viabilities of financial inclusion initiatives. So here is a thing which is able to drive viability, and on this perhaps we can ride all other services to reach out to the poor people. I'd like to be brief because we have a very big panel here, not more than 5 to 7 minutes. Kindly bear with me. SIDBI is among the top 25 DFIs in the world, and it's been created in an Act of Parliament for promotion, finance and development of MSME in the country. And MSME, as you know, it's around 44 million enterprises in the country, creating employment of 105 million, contributing 40% to the output and 36% to the exports. Now, the problem statement is that India has, as I discussed, 4.47 crore MSME. But if you see the number of MSME accounts with the banks, it's only around 1.13 crore, and that's to its number of accounts. So we don't know if it's the same customer having multiple accounts or the actual number of customers. But whatever we assume, around 3/4 of the micro enterprises in the country are derived of any bank financing. It's a huge exclusion that we are talking about. And in addition, and there's another survey which is conducted on unorganized sector in the country, and estimated that around 6 crore unorganized enterprise exist in the country, and most of them are not linked to the bank. Now, what are the challenges for lenders? When you talk about the lenders, the mainstream lenders I'm talking about, the banks, it can be categorized into 4 broad heads. Market is risky. Why market is risky? Because information is not available, adequate records are not available. Banks want guarantees, ownership records, transaction proofs to establish the credit history. Those things are lacking. Need for effective credit bureau. Some work has been done in this regard, but as we have been discussing in the morning, also a lot needs to be done. So market is perceived to be risky by the mainstream bankers. Services that are not adapted to lending to this segment, because you don't see as a banker much value into this segment, so you don't adapt your services to develop specific approaches for this segment. There are cultural barriers, eligibility issues, unsuitable management and cost structures, centralized bureaucratic processes, the file cost, which is still high, and the problem of distribution channels of the banks to reach out to this segment. I'll skip this. I'd like to share SIDBI's experience in promotion and finance of micro enterprises very briefly. Now, SIDBI, as I've been discussing, that we are the apex financial institution providing refinance to the bankers who are lending to micro and small enterprises, as also doing direct lending to the higher segment of MSME. But we have a major promotion and development program, which is out of, you can say, a kind of a corporate social responsibility, not strictly, but we allocate certain part of our profits for promotion and developmental activities, and we also get supported by international agencies and government for this. So the focus here is on building the demand side. I mean, we are trying to tackle both the sides. One is the demand side, because ultimately to make the bankers to lend, the comfort has to come that there are viable enterprises which are there. And for viable enterprises to exist, a lot of hand-holding support is required. So this is the activity that we undertake, which is basically classified into 2 broad categories. One is promotion of new enterprises, and second is strengthening of small fledgling enterprises. Now, how we do it is a very traditional kind of a method. We have been doing this for last around 15, 16 years. So enterprise promotion is through EDPs and RIP. I'll talk a bit about these programs. And enterprise strengthening through a cluster development interventions, and 2 more programs we run, CMAP and STOOP. CMAP basically stands for Small Industries Management Assistance Program, and Skill and Technology Upgradation Program in the full form of STOOP, which are run through reputed educational institutions like IITs and MBA institutions. We sponsor these programs through them, and these are basically 6 months to 3 months program, which basically target the MSME segment for building their skills and strengthening their skills. Now, this is how the whole thing looks like, the SIDBI's developmental efforts. Around 80,000 micro enterprises through these efforts has been promoted, mostly in rural and semi-urban areas. 1.5 lakh persons have been trained in various skills. Marketing support is provided to around 65,000 MSMEs. These are the cumulative figures I'm talking about. And we have made interventions in more than 100 clusters benefiting about 2,000 MSMEs. All these are basically demand side interventions. Very quickly about the rural industries program that SIDBI undertakes is, I mean, the approach here is that we appoint an implementing agency, a well-performing NGO or an implementing agency like EDII, Root City, etc., who actually open a field office in a particular geography and post 2 or 3 people, which work in that area for 4 to 5 years to provide all kinds of necessary services for setting up a viable micro enterprise. The package typically includes identification of entrepreneurs, identifying potential investment opportunity. The differentiator here is that work in a project kind of a mode in a particular geography, and then you help these micro enterprises to actually link up the banks and avail credit facilities from there. And bankers are happy to look at these enterprises because the support services are coming through a separate NGO. So in the morning, I was hearing a talk that how much a bank can do. Perhaps the bank cannot do beyond their main role of providing credit. And for this, an ecosystem has to be created in which the other agencies who are working in the field for creating demand, they do the hand-holding and try to link them with the banks. And that's how the success is achieved. Around 40,000 units have been promoted in 121 RIPs that we have done in 24 states. And the evaluation of this program says that it's a very penetrating, cost-effective, impact-making intervention. EDPs we all know, so I'll not discuss about this. I'll briefly like to talk about the responsible microfinance agenda which SIDBI is pursuing. Now, SIDBI started microfinance activities way back in 1999 when a SIDBI Foundation for Microcredit was set up. And at that point of time, there were only NGOs, there were no microfinance institutions in the country. So SIDBI is also credited with actually developing and building the entire microfinance sector in the country. Again, this was a private initiative looking at the supply side issues of providing credit to the poor. This is how the whole phases of microfinance program of SIDBI can be divided. In 94 to 99, it was basically an exploratory phase when we looked at NGOs. These NGOs were basically working with poor people, maybe forming them into self-help groups and linking them to the banks, but they were getting frustrated because the bank's funding is not happening. Many of them started lending directly as an intermediary. We looked at this channel in which we looked at the entire ecosystem, provided capacity building support for these MFIs, helped them to transform into regulated entities like non-banking financial companies, pushed for regulation, pushed for issues like capacity assessment rating, which was unheard of in the microfinance sector at that point of time, looked at the operational financial sustainability of these microfinance institutions, transparency, governance, which ultimately resulted in creation of a good number of self-sustained microfinance institutions providing credit to the poor. Now, the growth which happened was much beyond our expectations, and the sector grew very rapidly, and some issues came. I mean, whenever a sector grows a bit of unregulated and a very fast pace, some issues definitely crop up. So this happened here also. The next phase started from 2009 onwards, much before the crisis which actually happened in 2010, in which we understood these issues and tried to manage growth by creating institutions like a lenders forum wherein the lenders meet together and try to discuss the common covenants for lending to microfinance institutions. We started a code of conduct assessment rating. These MFIs were governed. There was no, very strict regulations under which they were operating, but they had a code of conduct basically mandated by their association. So we started a code of conduct assessment rating, and this was kind of made mandatory. Satisfactory rating was made mandatory before availing any lending from the banks. So this is how we looked at the whole thing, that SIDBI provided capacity building support in terms of grant made available through international agencies, term loans, equity funding, micro enterprise loans, funding through MFIs, and also subordinated debt, etc. Government of India provided an India Microfinance Equity Fund recently of 300 crores with SIDBI, which is currently operational. These are the figures. We have total disbursed around 7,405 crore through the microfinance institution channel, which has proved to be a very, very effective and viable channel. Next issue that we have been grappling with is after microfinance what? There's a gap between microfinance and the clients which the bank typically look at. So that was identified as a missing middle kind of a segment. Maybe you can say around 50,000, which is the microfinance limit, to around 10 lakh notional figure below which the banks, the mainstream banks, are not willing to look at funding the enterprises. We have been doing a program on this also since last 2 to 3 years, again partnering with financial institutions like NBFCs and the banks also wherever they're willing to partner to look at this segment. And this, again, the approach is same, that we take up capacity building of these institutions and also look at the demand side issues. A downscaling methodology has also been developed as a part of this project through extensive research of the international best practices in lending to this segment, based on which entire methodology, a very simplified methodology has been developed. It has been put on an IT kind of a platform. So it be piloted with this methodology for 500 clients. The results were satisfactory. And now we are trying to give this methodology to the banks, especially the tier 2 banks, the regional rural banks, urban cooperative banks, etc., who want to adopt this to upscale micro-enterprise lending in the country. Briefly talk about the current PSIG Samriddhi program which SIDBI is implementing. Now this program is actually looking at, it's 2 slides. This program is actually looking at building capacities of the agencies which are engaged in financial inclusion in the 4 low-income states of UP, Bihar, MP and Odisha. It has got 3 basic outputs. One is intervening at the policy advocacy space. Second output is looking at building capacities of the institutions, which may include microfinance institutions, NGOs, banking correspondents, and specific focus on these 4 states. And the output for what we call it is building the capacities of the clients and looking at, again, sustainable models here through which financial literacy training, etc., can be provided to the client. And there's another component too, which is being managed by SIDBI Venture Capital Limited, which is looking at making impact investment in social businesses which are affecting the lives of poor working in these 4 states. Finally, how we see the whole thing is that financial inclusion and sustainable development are the way to go for addressing the issue of poverty and rural development. Formal banking sector alone cannot accomplish these ambitious goals of universal financial inclusion. Only a collaborative approach can deliver, be it a collaboration with microfinance institutions, we're talking about collaborations with banking correspondent companies or NGOs, and a development of a thriving micro-enterprise model cannot be achieved as an outcome of several disjoint and singular initiatives. Whole value chain needs to be addressed, and the spirit of entrepreneurship needs to be spotted, kindled, nurtured, especially in rural and underserved areas, through interventions on the demand side also. Thank you.
Thank you, Mr. Prakash Kumar. For those of us who have been in the sector for almost 8-9 years, the kind of support and the capacity building that SIDBI has provided to several institutions in the sector, not only to the grassroots organizations, but also to the kind of talent and thought leadership that this institution has provided has been phenomenal. And it's great to see the kind of initiatives that you have. I'm feeling like an ATC now, having delayed the first session on a foggy day, trying to cover up the time with the other pilots. So requesting you all to be brief and share your thoughts so that the flights don't get delayed later. So Mr. Khera, can you please share your thoughts and then move.
For tech. The topic which has been given to us has really been deliberated for a while now, and I will really make my presentation very short and crisp and share my thoughts on that. The topic or the challenge which we really have today, is it something very unique to India, or is it really faced by the countries worldwide? I think it is an accepted fact that all the countries, whether developed or developing countries, are grappling with this problem. But the problem in India really becomes a bit unique by virtue of the fact that we have a large population, which is 1.2 billion. And therefore, the vast country coverage and the vast population coverage adds to the challenge which other countries have been really facing. So I will structure my presentation into three parts. First is just a glimpse of the banking in the rural sector. The second section would be how Wipro has really done and contributed in the rural sector, in the rural banking sector. And third is our thoughts on the way forward. So I think I will not take much time to really cover up this. So this is, the banking at a glance. If I really look at the population, about 70% of the population is the rural sector and about 30% is in the urban sector. Look at the correlation. For serving about 70% of the population, there are just 34,000 branches. And for serving 30% the urban sector, there are 60% of, 60,000 branches. The other table, if you look at it, in terms of the coverage, for every 1 lakh of the adult in India, we have about 11 branches and about 5.44 ATMs. And therefore, it is really coming to a coverage of just 35% who are really using the regulated financial services. If you look at the developed countries, say if you take the example of, say, France, where per lakh there are about 43 branches. And you look at the ATM ratio, it is more than 100. And therefore, the last column depicts that in terms of the coverage and the people who are eligible to use the banking platform, the coverage is about 97%. Moving forward, it is just, again, don't go by the absolute data. It's an indicative figure. So in all, we have about 1,57,000, and I stand corrected because in the morning, the EDI of RBI really did mention that it is about 2 lakh plus outlets as of date, right? But it is an important fact to really note that the pattern of the financial income in the rural sector is changing. And the one which is encircled depicts that the middle class income is really moving up, and there is a positive change. And on the right-hand side, the lower income group is reducing. So there, when we talk about the viability, I think I agree with that point that the viability aspect is picking up as we really move forward. So with this, a very brief preview to some indicative data. Let me really move on that how Wipro as an organization did really participate in some of the programs which were rolled out in the rural sector. And I will give an example of the core banking solution which was rolled out in the cooperative and the district cooperative banks under the umbrella of NABARD. Look at the spread. We covered the rollout of in 12 states, starting from Jammu and Kashmir to Andaman Nicobar, covering about 3,700 branches and 106 banks. This is a phenomenal coverage by virtue of the fact that apart from the numbers, the maturity of these banks was, they were not yet ready to really accept this, but that was the challenge which we really faced. Just to really give you an example, when we really began this journey, the ledgers were have to be really brought from their godowns on the bullock carts, dusted, and then the data capturing exercise started. So that's their branches acted more like a peer exercise for the branch managers, as it was also called as hookah corners, where they really shared the hookah with their prospective clients and did the selling while enjoying the hookahs. So the whole perspective is very different. While we may talk all good things, technology, we can do a step A, B, C and move on, but the challenges are of very, very different kind. We also talked about the connectivity aspect. Yes, I do agree that connectivity, providing the connectivity to the rural part, and I am talking of the tier 2 of the rural segment, is a marathon challenge. And we are still really struggling to really overcome that challenge because the options are very, very limited and restricted. And even if there are options, they are not cost effective, right? So that is a challenge which we really have. The kind of customers or the kinds of banking environment we have to deal with is very, very different. Even the branches, the people who are manning the branches, they need to definitely be uplifted in terms of the customer orientation, in terms of the knowledge level, the literacy level, apart from the prospective customers who will start using the banking services. So moving on to this is a real life experience we have. But I'm happy to share on this platform that we have already covered 3,500 branches. They are live in the rural areas using the CBM platform. Okay. This is my last slide, and as committed, I will be very sweet and short. See, the challenge is known. There is nothing new. People, all of us accept that, yes, there is a need for us to really start acting on it. A lot of actions and initiatives have been taken, but much more needs to be done. And I will add to it, rather than, all talking about it, it's time for us to really get into the implementation mode. So a couple of, stakeholders and actions which are really required. So from the regulation perspective, yes, if you want to really make the first-time users from the rural segment, the norms need to be really a bit relaxed on that front. We all know to open an account, there are n number of proofs and n number of things which are required, and which is very, very difficult for the rural community to really provide that. So this, I will not get into what needs to be done, but this is an area of concern. Education, we touched upon. I think education needs to be both from the branches being operated there or the prospective customers. I really propose that, Amitabh Bachchan had that advertisement on the polio drops, and I think it had a great impact. There has to be really something of that sort, where I think a lot of these rural population also today really watch the TV. Apart from that, there has to be really a very different way of, the education imparting. It cannot be a classroom or getting them. There has to be really some nukkad shows. There have to be Sarpanch-driven drives. Those are very out-of-the-box kind of ways and means to impart the education. The banks definitely need to do their part, because at the end of the day, it is their business too. By really configuring their products, which are more acceptable by the community which we are trying to address. If you really make the products very complex, the norm very complex, the stringent norms, I think they will open the account by virtue of some means, but then they will not use it, right? Ministry of Finance and the government has a big role to play. Now this is a sector which we all know, the viability is a challenge for all the stakeholders, whether it is an IT stakeholder, whether it is a banking stakeholder, it is a challenge. So Government of India needs to really work out some incentives to promote. And see, it is a journey. It is not that if I do step A, B today, tomorrow the solution would be there. So it's a journey. Initially some incentives need to be really rolled out. Like in the last budget, Finance Minister had really allocated a budget for Mahila Bank. And today we are implementing that program. But that's the kind of budget allocation needs to be done for FI inclusion. Connectivity, I think various panel members have talked about it. And I have also made a mention. It is a challenge, and therefore a very robust, cost-effective backbone needs to be laid down if we want to really enable these solutions. And today there is no solution possible without the IT enablement. And we are here to really support in this cause. And thank you very much for that.
Thank you, Mr. Kera, both for the impressive numbers and the crisp presentation. We invite Mr. Rajiv Kumar Gupta, Executive Director of SBI Life Insurance. That's the last presentation for this panel, and then we open up for the discussion. So, Mr. Gupta, over to you. While he's walking up to the dais, if Dr. Das is around, I'm sure Wipro is also doing a fabulous job. You will recommend Finacle Lite and Wipro now.
So, good morning to all of you. At the outset, when SBI Life was invited to be a part of the panel, we were wondering, why a life insurance company to discuss on challenges of reaching out to the, unbanked. But I guess the promoter, State Bank of India, and the group, as such, we have the advantage of having opened up branches in, most of the rural markets where the country, is present, although there is a long way to go. And I think as an insurer, thanks to the advantage we have with SBI, we have been able to also, show the highest penetration as far as rural insurance penetration is concerned. And I think that's an area we're working on. And the next area we would like to pick up definitely in a big way, though we have been doing some business there, is microinsurance. I think quickly, since the last 2 days, all of you must have heard so much statistics. I thought I'll quickly run it through all of you once again. That at the moment, only 35% of Indian adults have a bank account, and less than 8% wage earners receive their wages through, bank account. And if you look at rural population, out of this 742, million, this as of 2010, of course, only 18% have access to a bank account. So clearly, I think there is a capability deprivation, as rightly put by, Dr. Amartya Sen, and there is an opportunity as well. At the end of the day, it's the role of the banks on how we, take up this opportunity and reach out to the unbanked by providing, products which are viable, by reaching out through distributors who can reach out to them as quickly as possible. I think one of the, key aspects is the, demand side barriers to financial inclusion. Clearly, even today in most of the villages, we don't have access to bank branch, in spite of me telling you that SBI and the SBI group has opened up so many branches. So clearly there is a reluctance for individuals to, go across to bank branches which are far away and do banking. So there is a dependency continuing to be on informal sector credit systems like the pawn brokers, who obviously charge very high rates, and this is continuing to be a big problem, for the banks to reach out to the unbanked segment. Supply side barriers, I think, let me also confess here today, I am not able to successfully help my own, house worker to be able to open a bank account because he doesn't have the required documentation in the city of Bombay, So one can understand how big is the problem today, in terms of helping these people to open an account. Now, thanks to the business correspondents which State Bank of India and the other banks have, appointed, these guys are now allowed to open up, the tiny accounts, which in the process helps them to do limited banking, but deal with those people who are, business correspondents located in various centers. So there is a challenge. Clearly, I think in terms of legal identity, the collaterals, and the perceived risk, the unbanked and the micro insurance segment brings to the table. On the life insurance side, I think clearly we have a bigger challenge. Today, the life insurance penetration in India is less than 3.2%. So first of all, we need to increase penetration. I mean, that's the first key challenge. And within that, how do we reach out to, the micro insurance segment? So clearly, if you look at SBI Life Insurance, we are today the largest life insurance company after LIC among the new generation players. But within the, insurance penetration we have done, I think we have clearly reached out to the rural segment much more, than the urban. So if you look at our market share, SBI Life is more in the rural segment, and the next phase obviously we would like to enter is the microinsurance segment. And one of the key challenges we have faced in the microinsurance segment, of course, is designing products which are suitable. I mean, over the last 7-8 years, we have rolled out products which have premium size of 500 rupees, giving insurance cover of 25,000 and 50,000. And this we have been able to do through self-help groups of the bank, which have large, self-help groups. There are circles like, Uttar Pradesh, like Orissa. They have a lot of self-help groups through which we have also tried to, ensure this population by offering new products. Recently, we have revised and, come out with new products. We'll talk about it when the panel discussion starts about what kind of products have SBI Life innovated going forward. I think one of the successful models which, when I was, going through this financial inclusion, obviously we've had a couple of speakers from Bangladesh, but everyone knows that Gramina Bank, which is one of the most successful, financial inclusion model, introduced in Bangladesh by Professor Mohammad Yunus. And today I'm told this is already launched in almost 43 countries. And the same, bank has also obviously moved on to telecom, moved on to, energy, and moved on to various other segments. Clearly, I think these are models we need to look for. These are the innovation areas we need to look at if financial inclusion has to go somewhere, in this country. I'll give you one example of State Bank Group. I mean, this is one example I picked up because there is an NGO called Vikasa, based in Karnataka, who through State Bank of Mysore has helped us to reach out to almost 2.5 lakh, unbanked customers. And today we have lent almost 700 crores to this, state, and to about 2.5 lakh customers. And each group is about 10 or 15, members. And trust me, as someone said in the previous session, the NPA in this segment is less than 2%, whereas the overall NPA in the banking is much more, and in this segment it is less than 2%. So clearly there is an opportunity, clearly there is a profitability, and clearly there needs to be a model similar to this or the what example I shared about Bangladesh we need to work out if we have to reach somewhere on the financial inclusion side. A lot of measures have been taken by RBI. I have already discussed this. I think I'll leave behind this presentation if it can be shared by everybody. But I'm sure, much more needs to be done by the regulators, both RBI and IRDA, if we have to move, to financial inclusion in a big way. I think IRDA has started off, by mandating a certain percentage of business which needs to come from the rural segment and some lives which each insurer need to cover, through social sector. But that's not enough. I think what we do today is probably to meet, those norms which the regulator has set and not seriously looking at this as a business opportunity. So while SBI Life has done a lot on the rural segment, but I feel that it is beyond mandatory, requirements. One needs to look at this as an opportunity. And I think clearly, as an insurer, we are trying to work towards that. And as a lead insurer, we are trying to play a role in showing an opportunity in these two segments. I think a lot can be done. This is the last slide which I would like to speak to. I think IRDA could obviously look at opening up entry points for intermediaries like India Post. I think in between there were talks, to open up life insurance to the, India Post, but I guess that's on, back burner at the moment. There are a lot of milk cooperatives, RRBs and mobile offices. Joint ventures, between mobile service providers. Everybody spoke about telecom penetration, which is 60% in the country. I guess joint ventures between insurers and, telecom penetrations can help insurance penetration to the micro insurance segment in a big way. So clearly there are steps which I think collectively the regulators, the bankers, the insurers will have to take if we have to reach out, to this segment. And I clearly agree with many panelists here that there is a viability. I think we need to find innovative solutions to be, able to go there. I think from here on we'll start the panel.
Thank you very much, Mr. Gupta. We wish we had more time to... Absolutely not. Thank you very much for saving us some time. We move to the sharing of perspectives without the PPT mode now. Mr. Bhagwati from Andhra Bank, General Manager Andhra Bank, if you can share your thoughts. We have two more speakers after that.
Dear friends, this two-day FIPS conference has been a learning experience for me and has given a good insight with regard to the various aspects. Mrs. Joshi, Executive Director of Reserve Bank of India, in her keynote address, has covered a wide spectrum of points to give a stimulus to financial inclusion aspects. Financial inclusion has been a focused area both by the Reserve Bank of India and the Government of India. As we see look at the statistics that is being rolled out since morning, 41% of the rural households do not have access to the savings accounts, and 79% of the rural households do not have access to the formal credit. Banks are now viewing the financial inclusion aspect as a business proposition, and financial inclusion involves reaching of the banks to the unbanked areas, tapping the financial resources that are available with these unbanked people till now to be brought on to the mainstream of banking activity. There is a huge potential for the banks in this arena, and it is observed that almost 18 lakh crore untapped business is there in the rural areas. When we come to the branch network, over the years, between 1969 and till now, while in 1969 there were around 8,000 rural branches, the number of rural branches has increased to 89,000 as at now. As we are deliberating since yesterday, financial inclusion is not merely opening of bank accounts. basic savings banks accounts or no-frill accounts, as we observe, are being opened in large numbers, in lakhs, whereas when we look at the transactions, hardly 10 to 15% of these accounts are only transacting. We must ensure that the transaction exercise goes up. Financial inclusion and financial literacy go hand in hand. There are two sides of the same coin, and unless we improve upon the financial literacy activities, financial inclusion cannot be taken forward. Looking at the challenges, it is, as we have seen, opening of brick and mortar branches across is not a viable proposition. Basically, when it comes to the business correspondent model, the mindset is the most important thing. Being a banker, what I observe is even the branch managers and the other team do not accept the banking correspondent as an extended arm of business. All the mindset need to be changed, and branch managers need to understand that the BC or the CSP at the village level is worked along with him for viable business proposition. A good connect need to be established between the branch, the CSP or the business correspondent, and the account holders in the rural areas. We in Andhra Bank have found that this is the main reason why we are not able to increase the transactions. Almost, when we look at the transactions, it is only in 1/5 of our FI villages, 1 to 50 transactions are taken per day. So we thought to increase the transactions, we need to step up the campaign. From 15th of this month to the 30th of this month, we launched an FI campaign exclusively, wherein the focus is in conducting meetings between the branch manager, the ultra small branch officer, the account holders and the BCs, so that a good connect is established between them. The other aspect is with regard to the sustainability of the BC. Banks, if we look at, have floated RFPs in the past and have taken large volumes of business in arriving at the financials. But subsequently, when they have gone into the exact business, the BCs have found that the transactions are not being taken place and the viability is a big question. Fixed and variable remuneration should be the focus, because unless a business correspondent at the village level is assured of 5,000 to 6,000 rupees, because even if he goes for a daily wage earning, he is getting 5,000 to 6,000 rupees. So unless he is assured of 5,000 to 6,000 rupees as a commission or remuneration, he will not be showing much of an interest in the job. Banks need to roll out the products, which most of the banks are doing, and SHG group accounts. See, the self-help groups is a very good business proposition for the banks also, and if these accounts, these group accounts are shifted to the BCs, probably the transactions and the business volumes can also be increased. As I already said, connectivity, technology issues is another major area. Unless this connectivity is established, it would be difficult to take the financial inclusion aspect forward. One or two other points are with regard to the location of villages and the population. Now, Government of India has directed banks to cover the below 2,000 population villages also. But when when banks have started covering these villages, what we find is geographically they are spread in longer distances, and in fact, in some of the villages, the population is to the tune of 50 to 100. So coverage of villages also is becoming a difficult thing. And finally, but one of the most important factors would be with regard to the cash management. When we are trying to increase the volumes in business, and when we are trying to increase the day-to-day transactions, it is unless we have a robust cash management system in the banks and we are able to provide adequate cash to the CSP at the village level, the system would not work effectively. Ultimately, it is since the branch location and the CSP location are different, adequate and effective controls need to be exercised, and the illiterate customers need to be clearly explained of the do's and don'ts through the various forums. We may have to conduct literacy camps by way of rather magic shows or some literary shows where they are able to find some interest. Ultimately, it is a collective responsibility of all the different stakeholders, and neither the banks nor individuals can do in isolation. It is the IT solution providers, NGOs, the regulators, and the public at large who need to work together for the success of the financial inclusion at large. Thank you.
Thank you, Mr. Bhagwati, for sharing your thoughts both at the policy level and what your bank is looking at. Surely the kind of attention that this topic is getting from the senior leadership, the challenges would definitely be surpassed. So we move to Mr. Anand Bajaj, President and Chief Innovations Officer of Yes Bank. So Anand, what are these innovations that your bank is doing, and when can we say, yes, we are included?
Thanks, Anil. Actually, you made my thought change suddenly. Half of my work happens from where we say no, and we thrive on seeing how can we make it say yes. And pardon me if I talk 2 more minutes extra for this one question trigger that you gave. Our work started 1.5 years ago on this specific work on financial inclusion, where we saw long queues in front of PSU banks and no rocket science to it. We jumped out of the car at 7 a.m. in the morning, asked a couple of guys, hey, what are you doing? You are young. This is not a pension day. And the guy said, look, I have to send money home to my family, and I earn, and I have to stand here since 6 a.m. till 11 or whatever time when the counter opens. That set some context for us that there is business correspondent guideline. Why are banks running to the rural and 30 kilometers from there and then pulling their hair? Not that I lost hair there, but they're all running into the rurals and beyond, the last branch standing and then beyond. We said, can we use that 30-kilometer guideline within the urban centers? Do I need to go there? There were 95 million accounts opened with through my partner, collaborator, competitor banks already. They were all dry. The money was not reaching there. The core of financial inclusion, as was articulated to me, is to sell insurance, give him micro loans, get micro deposit, and transacting account. I said, all 4 won't happen unless I send money there. So we said, we'll take up the task of making the process easy for the customers to send money home, and then the things will probably propel. So innovation, as I say, is half about connecting the dots and catalyzing things. It's about orchestrating the whole symphony of the various musical instruments. And there are enough players playing their drums, trumpets, and bugles. I just need to say who needs to stop where and who needs to honk when. And it becomes a good music out of cacophony, if you see. And we have, thankfully, I have all my partners here except for one, that we collaborated. We said, hey, do you want to partner here? Do you want to partner here? So Ramu is there from GI Tech, and Subhash. NPCI, Vipin Surelia, Dheeraj, and Ram Rastogi, I see there as a core ecosystem provider. So we called them in, and we called an Atom as a mobile banking partner. What we realized was that if we rehash the BC guideline and we bring NEFT in 1.5 years ago when IMPS was not up, we said we'll bring NEFT outside the branch to my BC outlet, and we were the first bank to do interoperable money transfer while all other banks were doing only into their own customers. So there was one quick start over there. We were able to facilitate domestic remittance. When came IMPS, and we were very closely working with NPCI, we said, look, all these customers who do NEFT through us, if you connect your mobile pipe behind my remittance bridge, we can do magic. Overnight, November 15th or 14th, whenever we went live, the teams worked backward. Atom, GI collaborated, NPCI tested. I know that time there was some problem in Chennai, and the NPCI team handheld us overnight, over Saturdays for that testing. And what came out was overnight when we launched remittance through IMPS, next day morning the customer said it's no more yes money, it's yes magic. Because he got a SMS from SBI, from ICICI, from Axis Bank in 4 seconds. He did a transaction here. Till yesterday he was getting an SMS after 2 hours of NEFT compliance. Now he's getting in 4 seconds. That was a delight. That is one part of it. But harnessing the collaboration, when we went ahead, we realized that this same network is not only for financial inclusion, it is usable by my cash management corporate clients. We went to Pepsi. We did a pilot with Pearl Drinks, one of their bottlers, and through their route of truck, we deployed few BC outlets, and the guys started dropping money and going home at the depot at day end with zero cash. That was a good collaboration, I would say. So I say, like, I carry a Nokia whatever phone and an iPhone. So my Nokia funds my iPhone, I say. So what I did for financial inclusion helps us achieve things in the corporate cash management business as well. Guys, late entrants though, the intent is far-reaching, and I think the bit of collaboration has helped us a lot. And the program through the year and a half has won 12 awards, including NASSCOMs and the FIIAs. I think I owe it to the partnership that we collaborated with. Did I take too much time? All right.
Thank you very much. That was very, very interesting to see how different partners with different strengths can come together. But pun intended, I was also intrigued saying, no Kia becoming yes magic. So after the last speaker in the panel, Mr. Joshi, can you just share what mobile money is about, and how different is it from what yes is doing, and are there more insights for the group?
I think I have a completely different perspective here because we have been discussing challenges, okay? We've come to this point, 60 plus years of independence, we are talking of inclusion because there hasn't been the right effort in the last 60 years probably, and there has been exclusion because of that, okay? That's number one. Challenge number two is there is not enough money. If there was enough money for the banks to drive a bank-led model and go down to that village and open a branch, we wouldn't be conducting this conference and discussing challenges and solutions. There is not enough money. So there is probably, you should open it up to private players, okay? Like there are the Bandhans of the world or the Sahaj e-village or people like us who can reach out and probably do it. But then the challenge that we face is we are asked to do business at gunpoint, meaning that's the regulator saying you have to do this, 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 only then you can do it, otherwise you cannot do it. So if you really want to have inclusion and you really feel that those people who are currently excluded should be part of that financial network, then there has to be a different ball game. It cannot be a bank-led model. The other myth is the telco-led model, okay? The telco brings in technology wherein you buy a SIM from anywhere, and if there is a cell site, if it's plugged into your phone, you get a signal. That doesn't mean the telco has gone and set up an office in the rural village or somewhere else. So they cannot be the ones who can be acting. So the ones who have reached there are the only people who can help in actually making the inclusion dream a real success story. So I think we all should get our heads together and find out who are those people who can actually reach out to those villages and what technology can we use for connecting. Meaning, if you are thinking of using internet and some high-end technology, probably the villages are out of reach and you cannot think of it. Maybe basic text messaging, SMS, okay, which works on any phone, should be probably the entry-level solution from where you should start and go from there.
Thank you. Thanks for the short point, as well as very, very valid insight. Rather than looking at how to do and who should do, perhaps this topic needs more attention on the impact or outcome-based. By end of this year, by end of so many years, we should have reached this place, rather than looking at which roads take us to reach that place. Very, very valid. So we have completely run out of time. We will open the 2 questions. Okay, Shantanu says victory, or maybe 2 questions. We'll just take 2 questions, but before we take that, I just wanted to share two data points with you. One, a tier 6 village representing around 2,000 households represents in a typical 2 million district population that India has, a GDP of around 25 crores and a credit potential of around 19 crores. So we have heard of sustainability and lack of it for some time. You know, I operate a local financial institution model. For the last 5 years, I have been at it. And I'm talking of the service area that we work in. Only tier 6, 2,000 households, 18 products through a branch-led structure, and 25 crores is the GDP of. And it's just not a number. We have done primary research in 6 representative villages, and the range is around 23 to 25. So there definitely is a lot of business to be done. So quickly, just 2 questions. Whoever has mic. Wonderful, sir. Sir, question. Right.
This question is regarding to set up micro, small, medium, large enterprises covering 35 states of India and union territories, including defense forces in India. Any national bank who is participating or not participating and having insurance factor along with it would cover up a funding of 10 lakh crore of rupees to set up this project covering 35 states of India, union territories, including defense forces. The bank shall not invest from its own source, but shall manage all activities relating to loan funding and the recovery of loan covered by insurance factor, life insurance and the product manufacturing factor. The products shall be in international major sectors, nuclear power, which is a state government, which is a central government in all countries of the world. It is not open to private public. Second, solar energy. Third, healthcare products covering $20 trillion industry all over the world, including India. Fourth, tourism, medical tourism, the highest grade. Could it be possible to undertake this activity in context to this conference being held? If yes, they could give the details. If not, thank you.
Sir, thank you. If only we had given more time to Mr. Prakash Kumar, he would have shared a lot of initiatives that SIDBI, which is set up with this mandate, is equipped to do. Maybe during the lunch break, you may want to just catch up with Mr. Prakash Kumar from SIDBI, or you want to respond? Okay, we have someone responding for it. 1 second.
Not as a response, but it opens a delightful opportunity. You are effectively suggesting banks should be allowed to do other things as well, and which is a welcome suggestion. I don't know who will take call on it, but this will help viability. Today, how the banks do work through business correspondents, and to share thoughts here, is that it's not a standalone branch viability or non-viability. It has to be a kirana store or a stationery shop where you don't keep cribbing about viability. It's a per transaction break-even. So obviously, it is a collaborated work between banking, financial and non-financial services. Likewise, you're saying if a bank is supposed to set up a shop, it should be allowed medical, healthcare, etc. also. I'm taking it at that, and thank you. We'll take it offline.
Any other question? Last question, please. Okay. Thank you very much.
Hello.
It has been...
Hello, sir. We have one question. Hello. To the announcer.
Can we...
Yeah, myself, Ashish Chaube.
Yes, please.
Yeah, we have one question for the cash management system. How to manage the cash for the BC, and what is the process of the cash management system, and how is it secured?
Is there a specific question to any
Yeah,
member?
Anand sir. What is the cash management system for BC?
So what I said, cash management for corporates is different than cash management for BC. The business correspondent is given commission commensurate to take care of his cash. We believe in collaboration, and we have spoken about it to RBI as well, that the BC should be allowed to use the branch network of the competition as well. He should be able to go and deposit cash in a branch nearby, be it of any bank, right? So cash management, essentially we promote a BC outlet if he is closer to a bank branch. It helps, be it any bank. We don't get into that part. A. B. It is a pre-funding model that we run, and we don't have any risk in that. A BC gives cash upfront, takes a limit, and operates. So then after, it is his prerogative, and he manages it well. We pay out sumptuous portion back to the BC, 80% of the fee that we charge to customer.
How is it secure from carry from the BC counter to bank?
Can you take it offline? Yeah. He is around. Maybe you will get more ideas if you have a one-on-one conversation. Thank you very much for your patience, and apologies, we have really run out of time. And also apologies to the panelists. I had to really push them to save some time. Maybe if we had more time, their insights would have been very, very valuable. But all of us are around for some more time. One-on-one over tea and lunch would definitely be a welcome. Thank you all for your cooperation and sharing your insights.
Thank you, sir. We would now ask Mr. S.G. Anil Kumar to give away the mementos. To Mr. Muhammad Abdul Manan, MD Islami Bank, Bangladesh. To Mr. Anil Kumar Khera, GM and Head Delivery, Large Programs, Wipro Infotech. Mr. Rajiv Kumar Gupta, Executive Director, SBI Life Insurance Private Limited. Mr. V.B. Bhagwati, GM, Andhra Bank. Mr. Anand Bajaj, President and CIO, Yes Bank. Mr. Shashank M. Joshi, MD, Money on Mobile. And Mr. Prakash Kumar, GM, Siddhi. I would request Mr. Anand Bajaj to give the memento to Mr. S.G. Anil Kumar, please. So we have a... Thank you, sir, for moderating the session. I would request all the panelists to please step forward for a panel photograph.